All right, welcome back to the Financial Freedom Show with Paul Taylor, where knowledge is wealth. Today we have Brian Geiser, who is a radio show host up in Greensboro and Raleigh area. Brian has a financial advising services business up in Greensboro, and we've worked together for a long time. But glad to have Brian here today. Brian, right before we got off to break, we were talking about just all the stuff that's really going on behind the scenes in this economy and how people need to be prepared. And, 2008, a lot of people think that won't happen again, but it's happened. History repeats itself. We had 2000, 2001, 2002, which was exactly the almost exact losses that 2008 had. And here we are coming into 2012, coming into 2013. A lot of folks are still believing or thinking that, this isn't going to happen again. There's no way this is going to happen in my portfolio. But, Brian, we were talking that if you'd had $100,000 and you invested that in the S&P 500 back in 2000 today, after 12 long years, you'd have a whopping $108,000 in your portfolio.
Which is pretty sad. And if you throw inflation into that and round that off to around 3%, your money's not buying near as much as that $100,000 bought back then,
Exactly.
And people just don't think about that. They don't play that in, and I can understand why. We're always kept in the blind. The dumber we can keep our people, the more we can control the people. And hopefully people are understanding now, our public is understanding that, hey, I've got to, I just can't give my money to an advisor anymore. I've got to be a little more educated about it. I've got to ask more educated questions. Because a lot of folks don't know the difference, Paul, between an investment advisor and a broker, for that matter.
And that's a great point, Brian, because most brokers are commission-based, and being commission-based means they're going to be selling products or a product that is going to make them the most money.
Out of their inventory. They've got to sell what's in their inventory. All they have is a lot of people think, too, there was a survey done, and 98% of the people that use a broker thought that they had a fiduciary to them. And a fiduciary means that basically he's on your side, he's your coach, he's advising you for what is out there in a complete fashion. That doesn't hold true. They have a suitability to you to determine what is your risk tolerance, and then take the products out of their inventory and sell those products that fit your risk tolerance. Not necessarily the best thing for you, it just has to fit your risk tolerance. That in a nutshell is what a broker-dealer. So a good question to ask, hey, because a lot of people don't even realize what's my broker. It's my advisor. They don't know the difference. And I can understand why. A lot of people just starting to take tests like the Series 65. What is the difference? Because it is incredibly confusing.
Well,
who's a broker, who's an advisor, and what have you. And you need to ask.
Let's simplify it real quick. Folks, if you go to a butcher and tell him you're going to be grilling out, and I actually have a video I use with a lot of in our seminar that talks about this, he's going to sell you meat. He's going to sell you steak. He's not going to be concerned about your cholesterol or whether you're fixing to have a heart attack, because that's all that butcher does. And but if you went to a dietitian is going to tell you, hey, this is what you need to be eating, or this is what you need to be doing, because this is what's in your best interest, and this is what's best for you. And the problem is most people out there think they're going to a dietitian when, in fact, their broker is a butcher. So you've got to be working with somebody who has a fiduciary responsibility, and that is part of the class that we explain. And once again, that class you can come. We have it twice a week, Tuesdays and Thursdays. We're up in the Lake Norman area in Huntersville. We're in South Boulevard, Ballantyne, and off of Arrowwood Drive, and Brian's up in Greensboro and Raleigh area. But we've got those. You can call for one of these free seminars. It's 1-800-551-5086. By the way, I'm actually charging for this seminar at a college, so it's free information to you. And, Brian, that's just a great point, because you got to ask yourself, one of the first questions I ask folks when they come off is that you're never going to hear this from a broker is, how much of your hard-earned money are you willing to lose today?
Exactly. Going forward, how much of your money are you willing to lose today? And that's really where you got to be. Because the bottom line is, if folks, we will show you on a chart that's internet-based so that you can go there and create the same chart and actually be able to read it when you leave our class. And it will show you back in 2008 how rapidly 30% came out of the market, 40% came out of the market, how rapidly if you have 100,000 today, how quickly it can go to 60,000 at the blink of an eye. And it is taking forever just to get back to where we were in '07. But now we're hitting that same resistance level, and the market's saying, I don't like this, I don't like this. And since they don't like it, the Federal Reserve and all the powers to be and the institutions who truly control the market are pushing it till after the election. But when the bottom falls out, you won't be able to get off. That train will be moving. Right now, the train's moving at about 10 miles an hour, so you could jump off. That train's going to be moving at about 140 miles an hour, and you won't be able to jump off. You'll have to ride that thing all the way down. Then when it starts to smooth over, you'll be so exhausted from the loss, so exhausted realizing you got to work another 10 years that you're going to have to. You're going to feel your need of hopping off. You'll hop off. The train will leave town again. The market will rise back up some, but it won't be as aggressive as the last time. Then you'll get back on after the train's left town. I mean, it's just people, it's a psychology. They
Absolutely.
know how you operate. They know how you react. And if you don't have someone helping you guide through that mess, God help you.
Well, and here's how you find out if somebody's helping you guide or not. You got to ask the question, what is your current financial advisor doing to help you or prevent the next 2008 or 2000, 2001, 2002? And what Wall Street
strategy?
Well, yeah, you got to have an exit strategy. And what is Wall Street teaching you is that if you're in stocks and bonds, that's a diversified portfolio. I tell you point blank, that is not a safe portfolio. You've got to have a portion of your assets in safety. If you're fixing to retire and you cannot afford to have a portion of your portfolio in safety, you better watch out. Now, we do, we have risk portfolios, but when we do risk portfolios, Brian, we have tactical trading, which the tactical trading we'll spend, I might do this segment next week talking about, we can do a full segment just on that, but tactical trading means basically that they're not just going to be sitting there and buying and holding, that you can make money in a market that is moving, and it's whether it's moving sideways, up or down. A good tactical trading portfolio has availability to protect you in the downturns and to make money when it's going up. So, folks, the old buy and hold scenario that worked in the 80s and 90s is over. It's a thing of the past. S&P 500 basically has done nothing for the 12 years, and I believe we've got 7, 8 more years of this. So, once again, we do offer go ahead, Brian.
No, I was just going to say, basically, in a nutshell, it's going to adjust when the market starts to collapse. It's not just going to sit there and hope that it doesn't collapse. That's the difference between as you call it, a tactical. It's a highly managed portfolio as opposed to a passive portfolio, as opposed to, hey, we think we've bought some value stocks that in the long run they'll win out. But what is the long run? What is your horizon? Are you 60 years old and you're about to retire and start taking income from that money? Have you separated your safe money from your risk money, your income money from your growth money? That's what it's all about. And what Paul and I teach you is the three worlds of investment. And basically you have potential money, which is your risk money. You have protection money. Money, I just can't lose any of this. And then there's this little unknown world of hybrid world, which we go into a whole lot more in the class that you definitely want to find out a lot about. Paul, go ahead and give them your number again.
Yeah,
your website.
Once again, for the class, 1-800-551-5086, 1-800-551-5086, or you can email us any questions you have or would like to hear on the show at pt@capitaladvgroup.com. You can go to our website and email us from the website, which is capitaladvgroup.com.
And that ADV as in Victor, A as in Apple, D as in Dan, V as in Victor, ADV. And folks, do yourself a favor, go there, call the 800 number. You're taking a class, it takes about an hour and 15 minutes. It's a small environment. It's a very, very personal environment. And even if you want to meet with Paul one-on-one, call that number. He'll meet with you one-on-one and do that class one-on-one. Because
absolutely,
you cannot go forward into this unknown land anymore. I'm telling you, they're setting us up. We cannot print our way out of this mess. And if you're not set up to defend yourself for what's about to happen, you can really, you're gonna have some hurt in your financial world. You're gonna be working till you're 80 at Walmart greeting people. You best be careful. And I'm not kidding.
I've seen it happen. No, I've seen people come in. It's happened.
And it happens so rapidly. And according to history, and according to tactical trading, and according to the charts, going back to 1830 when the market began, in a nutshell, and the markets have been around forever, but 1830 since New York Stock Exchange. But bottom line is, history says we're in a bear secular market, which basically means we're in a long period of a down. And every time that down gets back to where we entered this bear secular, which happened to be January of 2000, that the waters start getting rough and we collapse. We collapsed all the way down to 03, ran a nice bull cyclical period of time, which is about 4 or 5 years of a nice little run, and then we collapsed again much harder than the first collapse. And guess what? The third collapse, the wave theory as they call it, without getting into too many details, we're going to collapse again, most likely. The high probability of collapse. And now that they printed the money they printed, the collapse is every time they print $1, it's that much deeper that collapse will be. Well, the last one took us down to a 666. 666, you heard me, 666, 667. S&P. S&P today is over 1,400. That's
exactly
way more than a 50% collapse. If we collapse 60%, 70%, folks, just imagine 60 to 70% of your wealth that you built and worked hard for gone.
Yeah.
You better learn about it. You better learn an exit strategy.
And what's
the number, 800 what?
It's 1-800-551-5086. 1-800-551-5086. And what Brian's talking about is S&P 500 didn't close but did go all the way down to 666, and that was the low of a day. But it's back up to $1,400 and hitting 1,400 points and hitting almost the 1,500 ceiling seems to be a very tough ceiling for the S&P 500 to get past. It keeps hitting that, and once it hits that, it's pulling down, even with the trillions of dollars that our government's been printing. And we're going to talk about that, but we're going to spend a lot of time on this third segment of the show of how to pass legally over $5 million in borrowing, 55% tax on estate taxes at your death on this next segment. So stay tuned for that. Once again, please email us if you'd like to ask any questions or come in and talk with us. Once again, my web address is capital ADV, like an advisor, advgroup.com, and you can reach us for questions. And we'll address some of these questions each week if they're good questions on the radio show. But please call us for either the questions or for the mini seminar that we put on every Tuesday and Thursday. Once again, located up in Lake Norman. We're located in Valentine, South Park, all over the town. So just give us a call. We'll be back for a third segment to talk about some important estate tax planning. This is Paul Taylor.